Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on May 19th, a little over 15 minutes after market close here in Jacksonville, Florida. And wouldn't you know it, we had another volatile, choppy day with the S&P battling around, once again, a key level. So we're going to get right into the details here. What just happened? S&P battles for 3,900. That's that key level. We were all over the place dancing around it today. Ended up closing pretty much right on it, which is relatively interesting given the action today. More choppiness, so a lot of up and down as the day went on, and a little bit of growth stock relative strength. But you got to take that with a grain of salt because a lot of these charts are really, really broken, and a lot of these stocks have been decimated. So you can call it a junk rally in growth stocks if you'd like to. But G6 up 1.08 today, S&P down 0.6, QQQ down a little over 0.5, Dow down 0.75%, mid and small caps showing a little bit of RS today. Mid caps down 0.2, Russell 2000 up almost 0.1 there. 60/40 actually up 0.1%, and Grotection down just a little bit, 0.06. Market state correction had that follow through on day 4, which was questionable. The volume was really close. Had the Fed in that throwing a wrench in there as well. But the next day action, yesterday's action, absolutely atrocious. Calling for failure there on that follow through day. You know, lots and lots of stocks getting absolutely hammered yesterday along with the indices. So as far as state goes, we don't have a change there, still in correction, like I just said, and trend gauge, no changes to the big arrows there either. They all remain in bearish / downtrend, leaders short-term, medium, and long-term. So that remains the same. And before we get to the charts, and today's video should be pretty quick, let me just highlight myself here and Revere. This is my email. If you have any questions on anything I cover, whether it's a level on the S&P, an individual stock, whatever it is, don't hesitate to send me an email. Or if you want to reach out to Revere, you can call us with this little button right here, 855-732-5932, or email anybody, Merrill, Dan, Tim, or Don at revereasset.com too. So let's get to the tail of the tape here. So like we said, correction, day 4 follow through day, that was this, failed the next day, that's this candle, and then you have today's candle. Headwinds remain the same. Put call ratio up slightly today, up to 1.21. It's been kind of living in that 1 to 1.2 range for quite some time now. VIX actually down a little today, which is surprising, but given the action, you didn't have all the major indices really selling off today. So VIX down slightly, fear greed up to a 12. It's been hovering around like the 9 to 12 range for the better part of the last week or so too. I think it got down to a 6 on last Thursday, and that's the lowest it's been in quite a while. As far as bull case and bear case goes, right here, reclaim the moving averages, failed, 518 confirmed, that rally failure and break back below key levels and key moving averages. That's back below 4,000, back below the ADMA. What were we watching today? S&P, which was down overnight, got very close to those recent lows. What would it do versus 38.59? That's that previous low. And resistance at 39.25, 39.30, actually pushed above that briefly on an intraday basis, but ran into some resistance around the 39.40, 39.50 area. Action-wise, opened down, some volatile chop, which really is the theme for the whole day. And then you get this rally kind of from around like 2:30-ish to 3 o'clock, and the Qs move up higher, make a new intraday high, or get very close to a new intraday high. The S&P actually does make a new intraday high at 3 o'clock, and then we fade pretty nasty into the close. We get from about 3 to 315 or 320, we went down 1%, which has been the theme. I've talked about that in these videos. A lot of up and down 1% moves, very quick moves to the downside and the upside. So volatile action again. Range-wise, overnight 38.59 to 39.35. Opened at 38.93, low of the day 38.76, high of the day 39.45. So like I said, battling around this 3,900 level, ended up finishing pretty much right on it. As you can see here, closed down 0.6, opened down 0.8, G6 up a little over 1. We touched on this, 60/40. That's supposed to be a positive sign there, up 0.1% there, and grow down just slightly at 0.06. Because we did buy a new position today. This is an oil and gas ETF. which initially responded pretty well, but by the end of the day had given back some of the gains. But sector-wise, bonds, gold, silver, miners had a good day today. The dollar was down, as you can see here. Shippers and software also having a good day. Software and G6 usually have a pretty significant correlation. So if G6 is up, usually IGV is probably up, or at least having a decent day. XLP continued its downward slide. XLU also weak. Defense stocks and transportation stocks also weak today too. Bottom line, choppy, volatile action remains the theme. It continues to be just a treacherous market with some pretty volatile and toxic price action. Like I said, a lot of quick moves up and down. You know, one moment it looks like the market may be ready to move higher. The next, it looks like it's about to break down. So just a lot of choppy, volatile action. As far as moving averages go, declining 50 around 43.10, declining 21 EMA around 41.08. If you want to use rough areas here, you got the declining 50 around 4,300, declining 21 EMA around 4,100. And here's the close from yesterday, 39.24. Follow through day fails badly, minus 4% to new correction closing lows, as you can see here. And then today's close, volatile chop, closes right on the key level, 3,900. A very poor close to end the day, however. So let's get right into the action here. I showed you the chart here, and you can see here we are closing slightly below where we closed at on this day here, 5/12. We closed at 38.58.87 right here. Sorry about that. Let me see if I can get that there. Closed at 39.30. I apologize. I was trying to get Market Smith to work with me here. Closed at 39.30 here on 5/12. Right here we close at 39.23. So that's what we meant when we talked about new closing lows. And then we make new closing lows for the year as well today with the close right here on 3,900. S&P index not fully updated yet, but let me refresh that and you'll see right there, closed on 3,900. So moving to a 5-minute chart quickly here, more of this chop, right? So we open down and to make the low right here, 38.76. And then we have a quick 1% move up in a matter of about 30 minutes or so right here. We come back down, that's another 1% move down right here, another 1% move up, 1% move down. And then this is where we make those new intraday rallies, right? Or new intraday highs right at the 3 o'clock mark, and then proceed to fade here into the close. Now, granted, we did not make new lows here as far as an intraday basis into the close, but this was just a very poor close here, considering it looked like we were making new highs on an intraday basis. Just a bad close, just really kind of indicative of the market behavior. Like we said, a lot of up and down, a lot of chop here on the S&P, but it is worth noting we are extended to the downside and not necessarily able to make a really strong stance at 3,900 today either. We undercut it quite a bit, as you could see there on the 5-minute chart, ultimately closed right on it. So very, very important level to watch tomorrow and just moving forward in general. Can the S&P hold that level, or is it about to give way? So moving along here to the Qs, the intraday chart is going to look very similar as well as the daily. As you can see here, same kind of thing as what we just went over with the S&P. Very choppy today, ended up closing down about the same percentage as the S&P. Made highs around 294, ended up pulling back about 1 to 1.5% into the close, just like the S&P, and having a really poor finish here. Again, extended to the downside on the Qs and on the S&P, but not really seeing buyers step up to the plate to really push this thing higher at the point in time right now. Dow was one of the laggards for the day, as you can see here, looking a little worse, actually breaking its recent lows from 5/12 when the S&P and the Qs did not. And it was the leader to the downside today, down about 0.75%. This chart actually looks worse than QQQ and SPY on the basis of this recent pullback here, breaking its 5/12 lows. And IWM and MDY, which looked much better as the day was kind of wearing on into lunchtime. These were stronger. IWM was up almost 1%, but finishing poorly along with the rest of the market here. Not able to eke out 2 consecutive closes over the 8 EMA in quite some time here. And again, today's lows and yesterday's lows going to be a really important spot to watch on IWM. That's roughly 175 is what you're going to want to watch there. And then on MDY, very similar pattern, but a little bit weaker, as you can see. Actually red today, although small caps finished slightly green, but similar pattern. Want to watch the lows of today. That's 433 on MDY. You can see all these major indices have a similar look. This nasty gap down, an attempt to go higher that ultimately looks like it is failing. And as you can see here, unable to really put together a strong close today either. So let's get into some stocks. And a lot of these that I had written down around 3 o'clock that were actually green ended up going red. So that just tells you kind of how the market behaved today. GDX, however, strong today. Gold and gold miners strong, as you can see here. GDX up about 6%, and GLD, I want to say up around 1.5 or so. Yep, 1.5 here, back above the 8, back above the 200. So GLD and GDX making a strong move. And maybe what's important to note here is the dollar also rolling over a little bit below the 21 EMA for the first time in a while here, going all the way back to March. So dollar rolling over a little bit, gold showing some strength today. Semiconductors, AMD and NVIDIA were acting pretty well up until that last hour of trading. Ultimately ended up giving back a lot of their day gains, but these two did finish green, AMD and NVIDIA. But important to note again, these are not necessarily, these aren't constructive charts. These are charts that have been absolutely crushed. I mean, NVIDIA from 289 down to nearly 150 here in a pretty straight line. NVIDIA does have earnings coming up, so keep that in mind too. But those two actually green today when the market was down. However, just poor action in general on these names. ALB, Albemarle, and LTHM, Livent Corporation, two lithium-related companies, up nicely today, up 1.3 here on ALB. LTHM, excuse me, let's get that right. LTHM here, up about 5%, 6% nearly, continuing its move after filling the gap here from EPS and then making a run at this high here, pretty close to it today. So LTHM and ALB with some nice relative strength recently. Also, some of the chemical names continue to show some RS. OLN, green today. CC, the Chemours company, didn't actually end up being green, but a nice response off this 40 level and off the 8 EMA for CC here. Moving along here, I mentioned the G6 was strong. I'm going to show you a few of those charts just to give you some context. Datadog up 10%, but hardly makes a blip on the daily chart, not able to get over the 8 EMA. Net also up close to 10%, I believe around 9, but again, hardly makes a blip on the daily chart, unable to even get over the 8 EMA. And last one here, CrowdStrike up a couple of percent today, but again, not really even making a blip. So, I mean, this looks like a bear flag here on Crowd potentially, but the point is there was some relative strength here in these names, but these charts are very, very broken. They've gotten very volatile down here near the bottom of these ranges. So you got to take it with a grain of salt. Sector-wise, you had XME up nicely today. Like we said, gold was strong. Gold miners, that usually means XME is up. XBI, biotech's actually slightly strong today. That kind of corresponds with the G6 showing some strength. And then we had shippers strong today as well. ZIM, SBLK, both nicely green on a day where the markets were volatile and finished down. So that's the good from today. Now to go on to the bad, I've been talking about Apple a lot recently, and I want to point out something here. It actually undercut this this recent low here from 512. So obviously Apple looks worse than the indices right here, right? It's below its 512 lows, unlike the S&P and the Qs. But up until the last hour of trading, this looked like it had maybe undercut this 137, 138 area and possibly was going to have a nice close. But again, that last hour of trading was not friendly to stocks, and this ended up closing near the bottom of the range. So it is very important to note that this 138, 137 level is a big, big level. If that can't hold, this does not look very pretty for Apple here, continuing to show relative weakness versus the market, down 2.5 on a day where the Qs and the S&P were down about 0.5%. Google, kind of a similar story, down a little over 1%, 1.3. Again, showing relative weakness versus the market. These are some of the biggest market cap weighted names in the markets, the biggest names in funds, the biggest names in the S&P and the NASDAQ. So these are, if these aren't showing relative strength, or if these aren't at least in line with the market, it's going to be tough on the indices. And we discussed this in detail on the podcast yesterday. Also LLY, which looked pretty good up until a couple of days ago, breaking down below those key moving averages. ABGO, one of the better looking semiconductor names, just absolutely falling apart and breaking the 200-day for the first time in forever here. Very important to note, this was one of the strongest looking names in the market up until the last 2 days, and really just a nasty move down from 610 to 530 at the lows today on ABGO. Also, defense stocks week today. We talked about that on tail of the tape a little bit. Here's General Dynamics, Lockheed Martin, down 2%. NOC, Northrop Grumman, also down about 1.5%, 2%. So these showing some weakness today. And we also saw continuation of the weakness in staple stocks today. So PGE, after a really nasty day yesterday, this is Procter & Gamble, down another 2.5% today, which is a pretty big down day for this stock. KO, Coca-Cola, similar pattern to what you see there with Procter & Gamble. And then XLP is pretty much going to look just like those. XLU, also weak today. So starting to see some of those defensive areas subject to some of this volatility in this very poor price action that we've seen in a lot of the other areas in the market, which is not the most encouraging sign here. So again, a very volatile and choppy day. That has been the theme for the last 2, 3, 4 weeks, really since the beginning of April. It's been that way. And until that changes, until you start to see some constructive behavior from the indices and some of these big heavyweight stocks like Apple and Tesla, Microsoft, Google, and what have you, it's going to be tough for the indices. So that wraps up today's video, and I will see you guys next Monday. Since we already recorded the podcast this week, I'll see you guys next Monday for Monday's video. So have a great weekend, everybody.